Is following the news essential in investing? This question seems simple, but it hides a major psychological and strategic distinction. Does following the news provide valuable information or create noise? Increase returns or increase the likelihood of mistakes? Let's examine this issue through academic research, behavioral finance, and market data. First, clarify the distinction. It depends on the type of investing. Active short-term trading, daily or weekly positions, macro data monitoring, company news tracking. In this style, news monitoring can be critical. Long-term passive investing, index funds, broad diversification, 10+ year horizon. In this approach, daily news monitoring is generally unnecessary. So the answer to, is it essential? It depends on your strategy. Academic reality. More information is not always an advantage. The work of Daniel Kahneman and Amos Tversky shows that under uncertainty, people do not make purely rational decisions. They make emotional ones. News flow constantly creates uncertainty, triggers impulsive reactions, activates loss aversion. Especially negative news has a stronger psychological impact. Is news information or noise? In financial literature, there is a concept called noise. Much of daily financial news is short-term focused, opinion-heavy, written with exaggerated headlines. For example, markets are crashing. Historic opportunity. This stock will explode. These headlines attract attention, but often do not improve investment decision quality. What does research show? Investors who trade more frequently are exposed to more information. On average, tend to achieve lower returns. Reasons include overconfidence, emotional interference, market timing errors, the long-term index perspective. For example, the S&P 500 has historically experienced crises, recessions, wars, a global pandemic, yet its long-term trajectory has been upward. Capturing the growth did not require monitoring daily headlines. How do professionals approach it? Warren Buffett has stated that he does not focus on daily prices or short-term news. He focuses on business value. He reads extensively, but not daily sensational headlines. He reads annual reports. He analyzes business models. There is a key difference between consuming news and acquiring knowledge. Risks of excessive news consumption. Overreaction. Sudden negative news panic selling. Sudden positive news late buying. FOMO, fear of missing out. New trend. Headlines push investors outside their disciplined strategy. Illusion of control. Constant news consumption makes investors feel more informed and in control. But research shows, more information does not automatically mean better performance. What kind of news is reasonable to follow? If you are a long-term investor, it may make sense to monitor fundamental changes in companies, tax regulations, major macroeconomic policy shifts, structural developments affecting portfolio allocation. However, daily price commentary, speculative analysis, social media predictions are often unnecessary. The psychological reality. News is often negatively framed, fear-driven, exaggerated to capture attention. The human brain processes negative information more strongly, which can distort risk perception. So, is it essential? 1. For short-term active traders. Yes, it may be critical. 2. For long-term passive investors. No, it is not essential. In fact, excessive news consumption can be harmful. The most important question is, does this news give me a strategic advantage? Or does it simply create emotional volatility? If the answer is the latter, reducing news consumption may improve performance. The final truth. In long-term investing, success does not come from keeping up with the speed of the news. It comes from staying invested over time.